Welcome to The Commercial Edge, the podcast where business, property, and legal insight come together. I'm your host, Elizabeth Rebolledo, lawyer, founder of Ardor Legal, and your guide to navigating the commercial world with clarity and confidence. Let's get into it. Hello, Seba. Thank you so much for being with us today. I'm actually really excited because we've known each other for a couple of years and I really love listening to your stories about what you do. But before we get into it, why don't you tell us for yourself who you are, what you do, and what you love the most about your job?
Thank you for having me here today. So my name is Seba Sabawai. I'm from Big Box Real Estate. I specialize in commercial real estate. What I love the most about my job is the opportunity I've had to work with some of the most experienced developers across Queensland. I've definitely learnt a lot from them. They've been inspired to do my own project developments as well. Very fortunate to have had that experience.
Love it. Big Box Real Estate. Why Big Box?
Because it's a good name.
I mean,
it's a
yes.
good catchy name, but also because it's what we specialize in. So we specialize in those large format retail assets, industrial large format. So that's our little niche in the market, those big box asset. And that what puts us aside from all the other real estate agents out there is that we have our little niche that we concentrate on and we do really well.
Amazing. Thank you so much for that. Now, what we're talking about today, like I said, is property developers and specifically off-the-plan contracts. So we do see these quite a lot in our space. I want to know a little bit more about, from the sales perspective, what goes on with the property developers. So, for example, we often see these projects, they can take a long time. So you've got from when the property developer actually starts the project to actually when it registers, it could be years. So you've got several years running time. There's construction costs, interest, loans to repay, and the market is shifting. Can you tell me a little bit about when in that long journey do developers typically come to you, for example, if they're looking at selling the lots off the plan?
I get contacted at all different points throughout that sales cycle, but the more experienced developers know to contact me and reach out, engage early on before the DA is even approved. So the earlier they reach out in that life cycle is the better results they'll actually get because they'll be able to implement that market feedback in their design process. Early engagement can shift what they actually get done on that site. So they might come to me with the intention to get a DA approval for 12 industrial units.
Okay.
After they have a chat with me, I might come back to them and say, actually, we've got a client for you or a tenant in place that might lease out those 2 or 3 units at the front, and they might amalgamate that. So that might go into their actual planning that they then set to the council to get their DA approvals.
Okay, so they can take into account what the market is asking for as opposed to necessarily what they're envisioning that they're going to create.
Absolutely. So that market feedback is crucial when it comes to tenancy mix and also the pricing and also getting those pre-sales in place prior to commencing the project.
That's amazing. So what does that conversation usually look like when the developer is coming to you early on? What sort of questions are they asking or what kind of pressures are they sort of foreseeing?
The questions that they're normally asking are more about pricing. They come to me with these questions regarding their feasibility and their pricing, and they want to know what the comparable sales are in that segment of the market. What are sales looking like? What's timing looking like on the sales? What's the vacancy rates in that local area? So these are all crucial factors to have in place when doing your feasibility. So they play a big part in that feasibility, which is the first step before even commencing the project.
That's amazing. And sometimes I'd imagine they probably need that information for financiers as well.
Absolutely.
Yeah.
Absolutely. So a lot of people think that, okay, we're going to, engage an agent and get these pre-sales done. It's not just about getting pre-sales done from a marketing perspective. This plays a crucial part in your capital stack. So you need to have those pre-sales in place prior to going out there and seeking the finance, whether it's from the bank or from your equity partners. They need to see tangible sales in place to have that confidence to be able to fund that project.
It's interesting. The one really unique and interesting thing about these off the sales or pre-sales, whatever you call them, is that you're essentially trying to sell something that hasn't been built. So the lot, or whether it's the building or the community title scheme, like it hasn't actually been developed yet. So from a pricing perspective, how do you gauge that when all you're looking at is like a dream on a piece of paper?
So from a pricing perspective, it always consists of the price of the land, the price it costs them to actually acquire that land, and also construction costs come into play, and then, comparative sales as well, but also what is the market willing to pay. So, they might have their FISO in place and base it around those three elements, which is the construction cost, the land cost, and the comparable sales. But then again, I might have a tenant in place for them for a large format warehouse, and that tenant might be willing to pay slightly above what the market is. So all these things come into consideration when they engage me and put their pricing together.
Fantastic. Now, what does, I guess, the conversation look like if they haven't engaged you early on and they've, look, we deal with property developers as well, and we're well aware of like their financial strains, particularly once they're getting to, look, they're very close to registration. They come to us with the request to prepare the off-the-plan contracts. We don't usually get involved at that DA stage. So when they come to us, they've had these financial pressures. Their term of their loan might be expiring and they really need to get these pre-sales out. What does that conversation look like as opposed to when they have approached you earlier, but now they didn't, and they've approached you when those pressures are hitting?
Because now they're in a position where they're reacting to the situation rather than having their plan in place early on. It's not a good situation to be in. It's the whole mentality of build it and they will come. Yeah, no. It's not a good way to go about things, because most likely the bank's going to come first before the buyers come. And when the buyers come, they're not going to come at the price expectation that you need to get the project to stack up. So most definitely engage early rather than later. Once they do come to me at that later stage and it's more of, hey, we've got urgency in place, we're stressed out, finance.
Banks knocking on
on
our
the door. Where, we need to get sales in, yes, we can get it sold for you, but it's not going to be an easy ride. So it's all about marketing an existing product that we've got on the market and catering the marketing plan for that specific product. And we lose that flexibility in who we can sell that product to.
And you've also got, I guess, what does the current market look like as well? And you haven't had that leeway to find the right buyers. So you might come into that stage in a market that's down at the moment. So there might be, look, and we were talking about this before, where there's been changes in the market. The economy's not doing great. There's fear happening, and people may be a bit more afraid to purchase things that, like we said, doesn't exist yet, and they'll have to come up with the funds potentially in 2 years, 3 years' time.
Yeah, absolutely. We are operating in a volatile market at the moment. It is unpredictable with everything that's going on in the world. I definitely advise to make sure that those developers have those margins in place, not just construction margins, but also time buffers as well, because you might, approvals might be delayed. Pressures are rising.
Will likely be delayed.
Yeah, will likely be delayed. And pressures are rising. So we've got construction costs going higher than expected. We can't predict what the construction costing is going to be looking into the future. So we really need to have those buffers in place. And this is where I think your work comes in play as well, is having the right contingencies in those contracts to mitigate these risks.
Yeah.
I know that having, a sunset clause in there is very important. Can you tell me more about what we should look for and why we should have sunset clauses in place?
So love that question, by the way, Seba. So sunset clauses, first of all, really are in every single off-the-plan contract, and they absolutely have to be, because we don't know how, like, we can predict or we can guess or estimate, more like it, educated guess, on when those lots will be registered and then hopefully settled. But like you said, the market can be volatile. We don't know what will happen. Approvals can be delayed. Construction costs may rise, which makes the project itself not commercially feasible. So sunset clauses play a little role in that. They essentially say, if the project, depend on the sunset clause, it could be if the registration doesn't occur within X time or settlement doesn't occur within X date, then the either party can terminate the contract. That's sort of a standard sunset clause. Whether or not a developer can rely on those sunset clause is going to come down to what type of development it is. So if, for example, it is a CTS, or a community title scheme, where you have your body corporates in place, so you might look at high-rise buildings, tenant, like, those lots where you've got shop 1, shop 2, shop 3, unit 1, unit 2, those types of ones.
Like retail centres?
Yeah, if they're selling them the lots individually,
yeah,
then yes, potentially. So those types of ones with the CTS, they can rely on the sunset clause. So if they haven't been able to register the lot or settle the lot within that specified period, either party can terminate. So the developer, and they have used, and we've all heard of the stories of where they've used it.
If the developer terminates,
yes,
does he still have to get permission from the buyer? Do they both have to agree to that termination?
Okay, so not if it's in a body corporate. And this is the funny thing about Queensland legislation, is that it's not always it's not uniform. So you've got, if it's a body corporate, yes, they can just terminate. They don't need anybody's consent. If it's not in a body corporate, so we're talking about you've subdivided, you're selling land.
House and land packages?
Well, house and land isn't really off the plan, but you're selling the subdivided lot. So the
Why
lot
isn't house and land off the plan?
Because house and land is more of the land is already registered. So you're selling, well, potentially the land is likely already registered and you're building a house on top. So you're selling a package, but it could be, so we do have.
Has the law always been like this in Queensland, or did they make changes?
No. So let's go back to, first of all, if it's a subdivided lot, in those circumstances, there's no body corporate involved. The developer actually needs the buyer's consent, regardless of what the contract says. Legislation will override. It will need the buyer's consent to terminate under sunset clause. If they can't get the buyer's consent, they then have to march down to the courts and get a court order to approve that termination.
So if the market goes absolutely haywire.
Like we've seen it do.
Yep. And we don't know the future, but if the market goes absolutely haywire and you've sold your house and land packages at a set price, or you sold your apartments at a set price, and now you need to change that price to, say, increase it, can you just terminate?
No. For that's not a reason to terminate. And there are general principles in place that the developers do, and this is why the legislation has changed in some parts. And I think that at some point the body corporate legislation will align with the Land Sales Act, which is a different legislation, that it essentially, look, we saw it happen in COVID. We had developers selling lots at X price. The price, like value of the land skyrocketed. So developers were heavily relying on sunset clauses to terminate and resell the property at much higher prices. Okay.
Is this why they changed the rules in Queensland?
So in about 2023, I believe it was, they changed the legislation, the Land Sales Act, that essentially said that they have to get the buyer's consent. And if they can't get the buyer's consent, they need the court's order. And the court wants to see that termination is done in good faith. So it's not just because the prices have increased. So it could be for legitimate reasons that the project has been extended, that they really couldn't get the approvals in time, that it is becoming financially unfeasible to continue those types of things. But we haven't seen that come into place yet with the body corporate legislation, which off the plan for units is different to off the plans for
250 dwellings and above.
Yes. Interesting. Anyway, so thank you for that. In relation to going back to our developers and when they're coming to you, when developers come to you with the pre-sales, what type of things do you help them with?
In terms of marketing, in terms of sales?
In the marketing. So I guess, do you have often buyers that you could potentially introduce to them, or you're taking it to the market to get the best prices?
So my main role is to give them that market feedback, and then they use that market feedback to shape their entire project. So depending on what the market demands are is what they're going to design their project for. And when we come back with that feedback like it's essential for shaping their entire project design. It influences pricing, it influences tenancy mix, it influences size, it influences nearly every single aspect of their project. And then once we get into marketing for those pre-sales, that's an essential part of their financial stack that they need to get those finance approved with the banks and with the equity partners as well. So I definitely start from the beginning with them, and it's a long drawn out process, but we help them from acquisition all the way until settlement. So the entire marketing campaign, and then the sales of each individual unit, settlement, and then, ongoing until the entire project is either sold or tenanted.
So as I understand it as well, Seba, is that often they need, so they're doing developers can often do like a large development, and they'll need X amount of sales to secure that initial funding. So are they using sort of staged approaches to ensure that they get those initial sales for the purposes of that funding, and then potentially further stages down the track to factor more into those buffers and things like that? Or is it we take the whole project into perspective?
No, we definitely do a strategic marketing plan, and within that plan it's always a staged release. So definitely staging the sales process, it's essential for your cash flow, for the success of the entire project, because your first release to market is normally a stress test to see how the market reacts to your product, and make sure the market reaction will determine whether your feasibility actually stacks up in reality or not.
And I guess that also allows them to, if they have done some pre-sales at X price and then they're doing some further sales at a later stage, they can take into account the market changes as well, and potentially add those buffers in as well.
Absolutely. Then they can add buffers as they go along for each different stage. They're open to changes throughout each stage, and they can react to the market, because often you'll find that these project cycles are very long. So a project could launch in one market and then settle in a completely different market. So to have it staged is absolutely essential to stage the release of that project.
There's a lot that goes. That goes into it. With it, I have a really important question, and this is more in relation to the buyer's perspective. So we've talked a little bit about what the developer is looking at now. These long-winded sort of contracts where, like we said, you purchase or you enter into a contract to purchase a property on day one, but you're potentially looking at settling that 2, 3, 5 years down the track. Though as a buyer, you potentially got that finance approval, and you would have got any finance approval on signing the contract, but that's not going to last for 2 or 3 years. So what are you hearing, the feedback from buyers with these off-the-plan contracts, the stress or their concerns or their worries around either finance or the property itself?
So my main role around this is to maintain that buyer confidence. And I do that by keeping open communication, transparency, and mitigating any risks that come along the way, and keeping that communication with the buyer. So from a buyer's perspective, a buyer, he can handle changes. A buyer can definitely handle changes, but what they can't tolerate is silence. So as you go along the project, if there's any amendments that need to take place or any delays in the project, that needs to be communicated and translated to the buyer, to maintain that buyer confidence throughout that long journey. Another important factor as well is to have those updates and progress reports always shown to the buyer as well, because they need to see that, we're confident in the developer, we're confident in the project, and we're confident the project is moving according to schedule, or we're still going to get what we purchased originally. So if there's any amendments that happen, we need to then convey those amendments to the buyer and make sure that they're on board with it, and that they understand that the value that they initially sought after for this project is still in the project. Yeah, it's maintained within the project.
I have seen those project updates that go out to buyers, and I agree they're really important, even when all you're saying is that there's been a delay. 2 reasons. I think from your perspective, Seba, it stops them asking consistently what's happening with the project, because they know that they're going to get consistent and regular updates. And second of all, it helps them plan for their moves as well. So, for example, they're buying a land to build and they're waiting for that land to register before they build. They need to also keep their third parties in place as well. And then the other thing that's really important, at least we see from the buyers on our side of things, is when they come to settlement, if they've got a no notice that registration is coming up, typically a developer under the terms of the contract only needs to give them 2 weeks notice or 14 days notice for a settlement, something 14, 21 days depending on the contract. That's not a lot of time after waiting for 2 years to get your bank into line.
Absolutely. And sometimes, they might need to get an extension on their finance as well. So it's absolutely crucial that they're on board, on track, and they know exactly what's happening when settlement, when titles are released.
Yeah. I think you're right in saying that it helps maintain that buyer's confidence, and it helps them also sort of plan around what's happening in that world as well.
Yeah.
And at least from our perspective, we've acted for developers and we have acted for buyers on these sort of scenarios. And most of our buyers are quite comfortable, like you said, with the changes.
As long as they've had that communication ongoing.
They've been made aware of
absolutely.
it, and then they can put things in place on their end so that they can continue with the project as well. So very important, I think, from everyone's perspective, that those updates are given and that communication is transferred to the buyer. Once the buyer starts signing the contract, that's when the parties are essentially locked in. The clock starts ticking. So so generally, like we talked about those sunset clauses, they could be 18 months, 3 years, 5 years, but they've signed the contract. We're all working towards a timeline. That has its advantages and disadvantages for both buyers and sellers. So from a seller's perspective, a developer's perspective, you've locked in your purchase price. Okay, so if the market goes down, that's great. You're getting a minimum of X. But if the market goes up, that's, we have a lot of regret, don't we?
Yeah, it depends which party.
It depends which party. So the buyers will be really excited. Again, if we look at COVID, we had a lot of happy buyers when they did settle for that much greater value. But we also had a lot of developers terminating those contracts to resell them at a higher value. From what you're seeing on the sales side, a buyer's paying more attention to contracts these days. So you probably getting the expression of interest in, they're signing the expression of interest. Contracts are drawn, is there, when they're buying a house, often buyers are just signing contracts without, getting that independent legal advice. With the off-the-plan contracts, it's a different scenario, isn't it?
Yeah, I see that buyers now are definitely more diligent when it comes to looking at those contracts. They're definitely more research-driven, especially with all the technology out there now. Buyers are more educated, they're more research-driven.
Particularly commercial buyers.
Commercial buyers. And if they're not, that causes trouble for me down the track. So I don't like the buyers that aren't research driven. I need to make sure that anyone that I communicate with thoroughly understands that contract before signing, because I want to make sure we have a smooth transaction down the road.
We don't want disputes.
Yeah, especially in commercial. It's such a long relationship that you're going to have with that buyer. You need to make sure that the next 12 months is going to be smooth. So if there's anything in that contract that they signed on that they didn't quite understand or weren't 100% on board with, that's going to cause issues down the track. And you don't want that in a long drawn relationship. You want to make sure that it's a good relationship and that they understand every single aspect of that contract, and not just understand it, they're comfortable with it.
They're accepting it and acknowledging that it is.
Yeah.
So most of these off-the-plan contracts will have allowances for the developer for variations. So it is really important for the buyers to understand that.
What those variations could be.
Yes.
And what they're comfortable with, and why those variations are in place.
Normally, and why they're necessary.
Yeah, and why they're necessary. If the purchaser understands why they're necessary, it's a lot. It puts the groundwork for a smoother transaction down the road.
Absolutely. So what kind of questions are our buyers asking?
Everything. They're asking everything.
What aren't they asking?
What aren't they asking? Oh, wow. So it depends on the transaction. It depends what the asset is that they're looking at. I mean, there's
And the
so
reason
many
for
different,
that
and the
asset
reason
as
for
well,
that
yeah.
asset and what their goals are. You know, is it going to just form part of their investment portfolio, or are they owner occupiers? Owner occupiers ask different questions than what
They'll want to
investors
know
would
when
ask.
the project is, timeline looks like for finishing.
Timeline looks like for finishing. They ask a lot more, about the building specs than an investor would ask. They would be asking, whether this suits our operational requirements. Is there trunk infrastructure? Is there serviceability? What are we looking at? Can trucks access this? What type of trucks can access it? They ask, different things like, is there enough hard stand? Is there enough warehouse clearance? So those details, those questions are very different than what the investors would ask. The investors would be more focused on the yield, strength of tenancy, different questions for different market segments.
In terms of challenges for that period between contract and settlement, are you seeing any challenges either for the buyer or the seller during that period?
There's a lot of challenges for everyone during that period. Normally, if the groundwork was put in place correctly, it makes a smoother transaction through that period. But I mean, we can't anticipate what's going to happen from external parties. So, there could be challenges when it comes to construction. There could be council requirements that haven't quite been met, and that might then impact the entire project. So then we have to then mitigate that risk and communicate that clearly with both parties to make sure that everyone's on board. If the communication process is handled professionally and you've got a good agent on board, then that normally, goes through and it's a smooth transaction.
Yeah. We often see between contract and settlement, not often, but sometimes, look, at the end of the day, we would all love for these projects to run on time, at cost, and as planned. That doesn't always happen. So the variations that are permitted in the contract are generally for smaller types of variation. So it might be changes to fixtures and fittings as a result of, some suppliers may change, that type of thing. Sizing of lots may change, but for minimal amounts. Where there are material changes, the buyer has the right to terminate the contract. So that might look like an easement that was material to their lot, or potentially the lot has changed significantly, usually about over the 5%. That affects either the value of the lot or et cetera, which they have the right to terminate the contract. What would be the reason from your perspective whether they would exercise that right or not?
Whether they exercise that right is entirely up to them, but this is where a good agent comes in play. So this is where your agent shines in those situations, because then it's a case of going back to the buyer and negotiating that, saying to them, hey, look, there's a material change. This is going to happen. Are you comfortable settling on this? They might come back and say, oh, no, we're out. Then that's a case of me saying, well, what can we do to make you comfortable with this? We try not to say a reduction in price.
Yes.
We try and say, maybe if we then paid for additional fit outs for you, or covered the first 6 months of rent, or, put in that rental guarantee in place, giving them that incentive to say, well, yep, if you offer this, then I'll accept this, and then negotiating that with them. So there's a lot of things you can do. You just need to get creative with the deal and see what we can offer that buyer to get them not to terminate that contract.
I think that's
and if
really key,
And if it's a genuine buyer, you find there's always room to negotiate, and there's always a way to have that deal continue and not lose the deal.
In my experience as well, Seba, sometimes the buyer still wants to buy, but sometimes they'll use that as an opportunity. And look, fair enough. Like, why wouldn't they? We had a situation recently where there was a material change in the lot at registration as opposed to what was disclosed in the disclosure plan, and the buyer asked for, it was just but still it's money, $40,000 reduction in the purchase price. Because of the state of the market at that time, our developer actually said no.
Yeah.
Because they could have another buyer the next day. So it really also comes down to…
That falls back to the agent. To
the
the agent that communicated with
to
him.
Say, hey, you know what? You can take it and settle it this week, or we've got another buyer in the market or another buyer that will pay more that you can, if they do terminate.
Just explaining it to him from the perspective of the owner, but you also need to explain it to him from a perspective of, hey, you've purchased at this price. If you exit this, you're looking at purchasing the same exact thing on the market, but you're actually paying more.
Yeah.
So you're asking for a reduction of $40,000, but buying the same asset at this current market elsewhere, you'd be actually paying more. So
we're now selling them
at.
Yeah.
So then you go back to the developer and say, look, can we compromise? Is there, would you be willing to expect this in reduction in price? They might go, well, we'll reduce it $5,000. Yeah. Bang, deal's done.
Happy.
Or they might say, hell no, we're not reducing the price or whatsoever. Yeah. So then I might come back to them and say, well, is there any other incentive we can offer to get this deal through? Yeah. Because the key thing is, like I mentioned earlier, before signing the contract, make sure you have a genuine buyer.
Yes.
So a genuine buyer that's going to have that long relationship until settlement and actually wants the property. You don't want someone that just,
if they're committed.
If they're committed, they're committed. If they're committed, when there's a will, there's a way. Both parties are willing to talk.
And I would imagine that the only reason really that they would terminate is if that material change affected their potential use of the property, like genuinely affected their intended use of the property, or their own circumstances had changed and it's an opportunity for them to use that as a way out as well. Yeah. In the instance that I told you about, our developer did say no and the settlement went through without a reduction because the market was so hot at that time and the agent had a backup buyer immediately at a higher price. So our seller was not inclined to give that reduction in that instance, but that's not always the case. The market could drop and the seller would, if they want the sale to go through, would need to be much more negotiable on those.
That agent should have communicated better with the current buyer, because I imagine that current buyer had invested time, money and effort in this deal as well.
I believe they had plans for, because this one was a subdivision and sale of land.
And buyers get emotional.
Yeah, they do.
Buyers get really emotional and they're like, nope, they change the price on me, I'm out, and they get into their emotions.
I think that's more like, even though commercial buyers are much more savvy, they're also very, how do I put it? They are.
They're human.
They're human, and they care about the deal as well. Like if they feel that they're being undermined.
Yeah. They tend to take it on and take it personal.
Like
and that's why
trying to pull the walls over my eyes.
You've got to let them cool down, sit down with them, even if it means, hey, go have a cup of coffee with him. Let him know this is what you're looking at, this is what you're going to lose, and understand we've got another buyer in place, but I just want to make sure you're aware of this, because they could be your next client for the next site as well. So developing those relationships with people
really important.
Is crucial.
So that does take me to my next question for you, Seba, is what's the kind of mistake that developers make?
Not engaging early.
Yeah. Or engaging the wrong agent.
Or engaging the wrong agent or an inexperienced agent is definitely a big mistake. Engage your agent early, get the market feedback and stay open to what the market feedback actually tells you, and implement that feedback into your project. So start your project design around who your buyer is. Don't build what you want to build what the market actually wants and needs in that area.
Think more commercially around those
absolutely.
perspectives. Yeah. From our perspective, a good developer will, like the relationship between the agent and the developer is actually important for our perspective as well, because you often will see or be in touch with the developer before we are. Yeah. And it's really important that developers understand that it's a different kettle of fish selling off the plan than it is selling an asset that's already been built. And it's not something that, for example, a real estate agent can just whip up a contract. That's something that really needs to be drafted carefully within the scope of the legislation, while still protecting the seller and developer's project long term as well.
And the worst thing that I've ever experienced is when they do engage the wrong solicitor. So there's been so many times where I've had to pick up what the solicitor is missing. They're not a commercial solicitor. They give them the wrong contracts. There's not enough protection in that contract. There's no mitigation in place. Settlement comes. The solicitor has it's just a residential conveyancer. Wrong solicitor for the wrong job. It's an absolute nightmare.
Yeah, on that perspective, what they really want to see in their contracts, like the allowances for those variations, because like we said, you are very unlikely to have a project that goes exactly as planned.
It never goes. It never goes as planned.
I have yet to come across that unicorn myself. It would be wonderful, but they don't. So you need to allow for those variations, whether it's, like I said, change of fixtures and fittings, change of the size of the lot, change of the name of the estate, change in
market circumstances.
Yes, to allow for all of that. On the flip side, so we've talked about what they do wrong. What do they do right?
Engage early.
Pretty much the
best thing developers do is definitely build for the end user, who their user is, what the market demand is, and build for the market demand.
So understanding who that is.
And stress testing your project before you actually launch to market, making sure your feasibility is in accordance to what the market demand is.
Okay, so with these types of projects, a developer might plan this project with a commercial viability in play. So whatever their commercial projection look like at the start of the project can sometimes go downhill, like we've talked about previously, about escalating costs, changes in the market, changes in construction costs, the likes of that. The project which looked viable at the beginning can sometimes get to the point where it's no longer commercially viable. What type of conversations are our developers having with you in these types of scenarios, and is there anything that you can actually help with?
Yeah, there's always something we can help with. The conversations normally around their exit strategy and at what point it would be viable for them to exit the project and how that might look like. So with increasing construction costs, increasing holding costs, the pressure is definitely rising. What would an exit strategy look like? They might have a project that, they've just obtained their DA. I might have a developer for them, might buy that project from them. Having a wide database and a wide network of developers, it's not uncommon for me to sell one project from one developer to another developer that then has that capacity to complete that project.
And can that be done at different stages?
At any stage of the
before
project.
DA, after DA, that type of...
Before DA, after DA. I mean, I've even sold projects that had the DA approved on them from one developer to another developer who then scrapped the DA and did their own DA. So it depends how experienced you are. I find that some of the larger developers have more experience and would definitely amend a DA that's done by someone that didn't have that experience in place.
In those circumstances, you'll often also find in the contracts themselves, so if you've done the pre-sales and you've got some buyers in place, the contracts should be saying, we should have a provision in there that allows the seller to on-sell the project.
Absolutely.
Without the buyer's consent.
Absolutely. And it happens a lot more than what you would imagine, but it happens quite often in the industry. So we do a lot of times sell projects from one developer to another developer.
It's interesting. Before we go into my last types of questions, do you have anything else like a tip for a developer or a tip for the off-the-plan purchases that you want to convey? Maybe a question for me?
Yeah, I've got a question for you.
Yeah.
What would you think is absolutely crucial going into these volatile markets that we're seeing at the moment? What are the most important aspects to have in your contracts before going to market or before committing to these projects?
It's a really good question. I think we've covered a little bit about that already in our conversation. Like we said earlier, once the contract is signed by the parties, we're all fixed. So it's really important to ensure that we have a well-drafted contract that allows for changes in the market. What it won't allow for, and that needs to be made clear for buyers and sellers, is changes in the purchase price. So once the buyer and the seller sign the contract, your purchase price is fixed.
However, we can renegotiate. Look, providing both parties agree to it and sign off on it.
I have seen it.
But you can't guarantee that the other party will agree.
I have seen it. Look, I've seen instances where a developer, again, COVID, had pretty much come close to registration and the prices had skyrocketed. Instead of terminating the contracts and trying to resell them, which a lot of developers did do, this particular developer went back to their buyers and said, look, the market's changed, our costs have increased, and in order for this project to be still commercially viable, we are asking for, I think at the time, X amount more on your purchase price. And it wasn't considering the changes in the market, it was $50,000, but the market had changed considerably, like a lot more than the $50,000. You had some buyers agreeing and then some buyers negotiating. So that was a mutual agreement to change the purchase price even where the buyer wasn't required to. But, we've got, in those circumstances, like you said, it would come down to, as a solicitor, we don't get involved in those negotiations. That's your role there. And I was quite impressed that some buyers had agreed to it because there was no legal requirement to do so.
They could see the commercial value in continuing.
And they were committed buyers, and that does come back down to that. But I think from a developer's perspective, I always say there's pros and cons to the off-the-plan contracts. For a developer, you know that you're going to get no less than. So if the market drops, you know that that's your fixed price. From the offside is that if the market grows, you've got X price and you don't have that account for the higher market value that is the value of the property at settlement. So that's why it's important for them to buffer those changes in and those costings in from the date that they signed the contract. And that's why we do see, like for our developers, we do see that staged framework, and we do see the value of the purchase price reflected in the market at that particular stage as well. Look, and our developers will be entering into the contracts at different stages for different reasons as well. Like I said, some of our larger developers have financial pressures that their financier needs to make sure that those—each stage has a percentage of those sales that go through. So depending on the market at that time, if they need those sales, they might, be those that you'll see those changes as well.
So I'm seeing a lot of friction between my clients, the developers, and their solicitors. I'm seeing a lot of friction when it comes to preparing these contracts, in terms of there's a lot of red tape in there. There's a lot that goes into there that frustrates the developers because they feel like it's just not necessary to have that in there, and they feel like some of the stuff that goes into these contracts is detrimental to the actual sale. How do you feel about that, and how do you feel about the pressure that they put on you when it comes to timelines and meeting those timeline requirements?
So I can't speak for other solicitors, first of all, so I should put that out there. But a solicitor's role essentially is, the primary role is to protect their client. So as a good solicitor will be ensuring that they are putting a contract together that protects the client's interests and mitigates risks. So often, particularly with the off-the-plan contracts, you're going to see a lot of clauses in favour of the developer. The solicitor that prepares that contract is going to put those clauses in play, not because they want the deal to fall over, but because they want to protect their client. So that's one. The other thing that's really important is for that communication between the developer and their solicitor, for the solicitor to also understand those financial constraints or what type of pressure they're under. So in our world, we might have a developer that's really planned out their development, and they understand that, look, we're sitting well at the moment, but we know that we've got to at some point get the off-the-plan contracts drafted so that our agent can start selling them. The last thing that they want to do is say, well, I need those contracts prepared by tomorrow or this week because we've got buyers waiting. That's actually not viable, because the solicitor needs to ensure that those contracts are prepared properly in accordance with the legislation and protecting the buyer's interest. Protecting the seller's interest. If the seller or the developer says, look, we're coming up to pre-sales, we're going to start marketing this property, we're going to need these contracts prepared, and communicating timelines, then the solicitor is better prepared to prioritise their time to ensure that those contracts are prepared in accordance with the developers' needs. Look, we've seen it all. We do see, and we do have clients that say we need these prepared like immediately. It's a matter of urgency, and we will need to reprioritize our workload to ensure that they're prepared. But off-the-plan contracts is not something that can be prepared overnight.
Yeah.
They need to be drafted in a way that reflects the project. We need to have the right information in place as well. So it's not a matter of us preparing a contract. There are disclosure requirements under legislation, and if they're not done correctly, then guess what? You've got 2 years under contract, and now that buyer has an automatic right to terminate because those clauses weren't put in there or that disclosure wasn't included. So it's important that the developer provides all the necessary information in a timely manner that gives them that breathing space to prepare a contract well, to have the opportunity for them to review it to make sure it meets their expectations and their commercial needs, because a developer has their own objective as well.
Yeah.
And we need to make sure those contracts reflect their commercial objective as well. Okay.
Yeah.
That comes back to the solicitor, and then it will go out to the agent so that they can start issuing those contracts to potential buyers.
Yeah. I've got another question for you.
Yes.
A lot of the times we see our clients just use regular solicitors. What are the risks of using a normal solicitor versus a commercial solicitor? Because they don't want to use a commercial specific solicitor because they don't want to pay that extra dollar. So what are the financial risks they're looking at, and why should they use a commercial solicitor?
I always think of it this way, and I wish I could portray it, so thank you for asking that question, is that you're actually investing hundreds of thousands, these days millions of per property. So you're looking at multi-million dollar, development projects. You're risking your multi-million dollar development projects by not getting the right solicitor with the right experience in place. So that's all. Rather than looking at the cost of the solicitor, you should be looking at the cost of not using the right solicitor.
And I find
one contract falls over, depending on that. What are they these days? Close to $1 million for a warehouse, depending where, and it could be a couple of $1 million for one warehouse, depending where they are. So that's what you're risking. The benefit of using, for example, Ardor Legal, we're both a commercial and property lawyer. So we have the benefit of understanding commercial lots, and we have the benefit of understanding the industry as well. And we take into account, yes, absolutely, we have to take into account the legislation, and the experience that we have with our developers also gives us the experience of what it is that they need. We've seen a lot. Yeah. So each time we draft a contract, we take into account the experience of what we've seen, the issues our developers have come across, to ensure that we're mitigating as much as possible and protecting their projects.
And what I find a lot is that when they use the wrong solicitor, it ends up costing them a lot more money. Because the wrong solicitor will drag it out for all the wrong reasons. Yeah. And if they had the right solicitor in place that's more knowledgeable of this particular field, you often find that the solution is quite simple, and they have more knowledge and more flexibility of how to mitigate this issue and how to solve it straight away.
We've got developers that we assist throughout the contract life, particularly. So we'll prepare their off-the-plan contracts. But like we said, these are for years. Yeah. These run for years. So we will assist our developers not just with preparing their contracts. They then negotiate with third parties like builders for the off-the-plan. So they're now selling off-the-plan contracts for house land packages. We negotiate option deeds. We prepare reports for their bank on the properties that are unconditional, which ones are still.
Yeah, it's long. It's a long cycle,
and
it's a lot of moving parts to it.
There's a lot of work that goes into supporting our property developers that we are able to assist with because of the level of knowledge and experience that we have. So there are some really great general practitioners, but they may not be able to give that level of support for the developers in the different aspects of the project, not solely on the off the plans. Another thing that we assist developers is in the registration of the lots. So when it's coming to registration, if you don't have a solicitor that can prepare both the contracts and do the registration, then you're sort of using different solicitors, and particularly if you're shopping around for the best price, the left hand's not talking to the right hand. So we're having difficulties. We're seeing difficulties in that when you've got one solicitor to support
you need a streamlined process.
If you've got one solicitor that supports that project overall, you know that we already know about those easements because we prepared them.
Yeah. And you definitely need a real estate agent that understands the entire process and can convey that to the buyer.
Absolutely. Absolutely. All right, let's hit with, before we wrap up, I want to ask you a few quick questions.
Okay.
So just the first thing that comes to mind, don't overthink it. And we've probably covered it before, but a one sentence or two sentence response, what mistake developers make often?
They design a product that they want to design rather than what the market demands from them. So that's a big mistake that developers do. Oh, and they don't have enough margins in place when it comes to construction costs or time.
They don't factor in those changes.
They don't factor in those changes and the ups and downs of the market.
One thing that developers do that makes your job easier?
One thing they do that makes my job easier is reaching out early and also having a thorough understanding of the market and the experience. So it definitely makes my job easier.
Side note, communication with the developer. So if there's changes happening in their project, are they communicating that with you?
They need to be communicating it with me.
They should be.
They should be. Sometimes they don't, but then, I know to always call them. Haven't heard from them for a while, I'll give them a call. It doesn't matter how annoying it gets to them, I will always pick up the phone and call them and find out what's going on, any updates, any progress, because I understand that they're probably
dealing with it.
Yeah, they're dealing with a lot and they're dealing with their project and they often forget to update the agent. So when I don't hear from them, I pick up the phone and I call and I ask for those updates.
They'll be knee-deep in like construction and negotiations and finance and all sorts of things like that. But like we've said multiple times, it's really communication is important. One piece of advice, so we, for example, in our world, we act for large developers, but we also act for new developers coming in. Can you give our clients one piece of advice when they're doing their first development or subdivision project?
Design what the market wants, not what you want to sell.
Yeah. Your vision is your vision, not necessarily somebody else's.
Not necessarily someone else's.
Okay. Thank you so much, Seba. I'm really glad you came with us today. Can you tell me how people can find you? So if we've got a developer out there that wants to work with you, how can they contact you?
They can contact me through Big Box Real Estate. They can contact me directly. I'm not hard to find. My phone number is pretty much out there everywhere. So, yeah, it's easy to contact me.
How do we spell your name?
Seba Sabawai.
How do you spell it?
Seba Sabawai.
Fantastic. And website, LinkedIn, you're on all of those?
All of those, yes.
Fantastic. All right. Thank you so much.
Thank you so much. Thanks for having me here.
It's been a pleasure. You've been listening to The Commercial Edge, the podcast where we dive into the real stories, strategies, and legal insights behind smart business and property decisions. I'm your host, Elizabeth Rebolledo, lawyer, founder, and fellow entrepreneur. I'm so glad you joined me today. If you've got value from this episode, make sure you follow the show so you never miss a conversation. And if you're building, buying, or growing something great, head to ardorlegal.com.au. We've got practical resources, guides, and legal support to help you move forward with confidence. Thanks again for tuning in. I'll see you in the next episode.